Today, we're going to break down why Bitcoin is an essential part of the abundant life, no matter what you believe. We'll look at what the experts are saying about the macroeconomic crisis we face and how Bitcoin is the solution. We'll hear some of the smartest people in the world tell us what Bitcoin actually is and how it's about to reach the point of mass adoption. And we'll finish out by answering the most burning question: what should you do about it and how? Welcome to The Download. This is a show about living abundantly as we align with God's purposes and calling for each of our lives. If you know your life is less abundant than it could be, and you're ready to do something about it, subscribe to the show on YouTube or your favorite podcast platform of choice. Okay, before we talk about what Bitcoin is and how you should get involved, we need to look at the problem that Bitcoin solves. Because without a problem, you don't need a solution. The problem with this problem is that we don't see it. It's hidden in plain sight. So God created a world of abundance, a world without lack. But the problem is humans rejected it from the very beginning, and we have continued to reject it over and over and over again throughout history. It began with us getting kicked out of the Garden of Eden, and it continues today through corruption and control from a financial system we don't even realize is stealing from us, through currency debasement and inflation. But I'm just a regular guy, and I am barely scratching the surface on what this all means. You should not listen to this. This is not financial advice. You should not do what I say. So why don't we listen to some of the best minds in the space to help us figure this out together? We'll start with Michael Saylor. He's a businessman, and he didn't believe in Bitcoin, but now is one of the main evangelists. In this first clip, he helps us unpack the question, what is money? Here's a hint. It's not the paper that's in your wallet.
Well, money is just, the most tradable good, the most durable, tradable element or unit of something that we can trade for something else of value. So in the history of the world, you go back 10,000 years, people might have traded seashells, or they traded stone coins or polished glass beads, or they might have traded arrowheads. What is the universal commodity that we know people will accept? And we use it to create a market economy, to solve the problem of coincidence of wants, right? Everybody produces something different. And you need to, and if you have stone axes and I have food, and I want the stone axe and you want the food, we trade for some ratio. But if everybody doesn't have exactly what everybody else needs, that barter economy breaks down. It gets too complicated. So we know that there have been sophisticated economies for 1 million years. You can find stone axe factories that go back 1 million years. The issue really is, how do you make those economies work? Through a process of trial and error, people eventually arrived at metals, copper coins, silver coins, then gold coins, and they worked with some kind of metallic unit of account and type of money. But even in modern era, you could see people use bales of tobacco as money in the colonies before the Revolutionary War. In prisons, people use cigarettes as money, and POWs use cigarettes as money. What's the problem? The problem is, in the modern era, we use fiat currency as money for the most part. And is it a medium of exchange? Sure it is. Is it a unit of account? Sometimes. Is it a store of value? It's a store of value with a half-life of some amount. So what's the half-life of the money? How long does it take for the money to lose half its economic energy? Well, that's what we'll call the inflation rate. But the problem is, the actual monetary inflation rate isn't reported. Nobody tracks it. So if you actually have $1 million of capital and you invest it in the dollar and you hold it there for 100 years, the dollar supply increases 7% a year on average over 100 years, which means that your capital loses half its value every 10 years. And over the course of 100 years, you're cut in half 10 times, which means that you start with $1 million and you end up losing 99.9% of the $1 million.
Now, I know that's a bit mind-melting. Let me dumb this down for you. If the dollar you earn today loses value year after year, If you can buy less with that dollar as every year passes, then saving dollars is a terrible way to live abundantly. Savings accounts are graveyards. See, the American dream we were promised, that is over. See, my parents, they bought a house pretty close to here for $70,000. It's a little beach town in California. This was the 1970s. My dad was on a teacher's salary. That is no longer possible. Raoul Pal, a macroeconomist, he used to be a Goldman Sachs guy, and over the last decade or so, he has been obsessing about these trends. And he puts it this way.
So let's cut to somebody who's in their 30s now, because this is the really important cohort, I think, for this. They can't afford to buy a house. So look, here's some stats about a 30-year-old today versus a 30-year-old in 1983. So a 30-year-old in 1983, 85% of them lived on their own. They could afford a house or an apartment to rent or to buy. Now it's 64%. So people are having to live with other people. Marriage rates, they've gone from 80% of 30-year-olds in 1983 who were married to 47% now. Having kids, gone from 60% to 32%. Population growth is collapsing because people can't afford it. And home ownership for a 30-year-old has gone from 50% to 32%. It just shows that dramatic change that's happened over the decades, and why each generation has found it more and more difficult to be like their parents.
You see, this is a result of money being debased. When the government just prints more money as needed to cover its debts, your dollar becomes worth less. It's theft. And it is not going to stop because it can't.
The true inflation rate, or I'd say the currency debasement rate, the monetary inflation rate, is the rate at which the supply of currency is increasing.
Right,
And
which would be about 7 to 10%.
that's 7 to 10%, might even be more. I mean, you can actually trace over 100 years about 7%, but in the past 20, 30 years, it looks like more like 10% in US dollar terms. And weaker currencies, 14%. And the weakest currencies, 20 to 30% a year.
Do you think that's going to stop anytime soon?
No, it's impossible for it to stop, because governments everywhere in the world just spend more money than they take in taxes. And so the temptation is always just to print money to pay bills, either to fight wars, or to implement government policy. If I'm going to forgive student debt, if I'm going to fight a war, if I'm going to implement a medical policy, if I'm going to, pay a bureaucracy, I have to come up with money to do it. So what you have is a whole world that goes through this currency collapse.
And this isn't the first time in our history that this has happened. It's actually the same cycle that keeps repeating. You see, the problem is that the dollar you earn today will be worth less tomorrow, and less every day after that. It's a losing game. You cannot keep your money in a savings account. The system is broken. It's not an honest or real store of value anymore.
Normally, in most modern societies, the money doesn't break down as a medium of exchange. It breaks down as a store of value. So that means that, you can store money for 12 to 36 months or maybe up to 10 years in the dollar. You can't store it for a lifetime. So if you have some money, you can't just store the money. If you want to keep your economic energy, you have to gamble it or invest it. You have to speculate with it, or, you worked your entire life, you have a certain amount of retirement, and now if you store it in the bank, it'll be worth nothing. So you have to go and invest it in the stock market. But if you pick wrong, you lose it. So we basically force people to be gamblers, speculators, or hedge fund managers if the money's broken. And the money is broken. So what is the significance of Bitcoin? Well, let me say it a different way. You just take your money, take everything you earn, you buy Bitcoin, and you wait, and it goes up 20 to 40% a year forever. Or You take your money and you invest it in a bank account and you get 3% after tax, and everything goes up 10 to 15% a year in price, and you just get poorer and poorer.
And even worse, putting your money in an index fund like all these wise financial advisors will tell you to do, that doesn't work either.
The S&P index is simply tracking the currency supply of US dollars for the past 100 years. As when you invest in a diversified portfolio of stocks, you're not making money. All you're doing is preserving the capital that you had. You're not getting poor. You're not getting richer. You're just tracking sideways.
This is a complex matrix of control, exploitation, and power that is played out over and over. I think about my children, and this is when it gets very real. If they just try to live their lives as my parents did, or even as I did, it's not going to work out. They will get stuck on the wrong side of the game. Our job is to educate ourselves, learn about how all this is working against us, and figure out what our options are. This is the very reason that Jesus went into the temple and turned over the tables of the money changers. It wasn't primarily because they were turning the house of God into a marketplace. It was primarily because they were dishonest. The money changers, tax collectors, and Pharisees were stealing money from the poor, using dishonest means and benefiting themselves. That's exactly what's happening now. The American dollar and nearly every paper currency in the world is a dishonest scale. In Proverbs 11:1, it says, "The Lord detests dishonest scales, but accurate weights find favor with him." God hates exploitation. God hates when we lie about an exchange of money and its worth. And it has become more and more clear to me that God must hate this current dishonest scale as well, the one that we live in. So that leads us to the question, what is the possible solution? If I want to leave an inheritance for my kids, while I live in a system where every dollar I earn today will be worth 99% less for my grandkids, what in the world do we do? Well, I think it starts with moving dollars into assets. For example, if money is being printed every year, which it is, then asset prices go up. If there's more money in the system, then every asset becomes more expensive just by the sheer fact that there are more dollars in the system to buy those assets. And that's how they trick us. We think our house is growing in value, but it's actually not. It's the same house. It's growing in price because there is more money in the system. Now, a house is an exponentially better store of value than a savings account, but it's still part of a broken and corrupt system that is ultimately failing. And that is where Bitcoin comes in. We'll get into the details here, but let's start with another great thinker in this space, Jeff Booth. He's a visionary Bitcoin thinker who argues that technology-driven deflation makes Bitcoin the only path to an honest and abundant future.
So what's happening in Bitcoin is people are finding a different reality, one filled with hope, truth, hope, and abundance. And as they're moving to it, they're more and more people are finding that. Now, we're really early, and most people, and it's easy to simply, hope is way more powerful than fear. Mm-hmm. But fear is very powerful in keeping people stuck. That's how the COVID regulations come in. That's how all regulations, how all individual rights and freedoms die, is through fear, to be able to consolidate power. And hope is more powerful, but you can't underestimate fear, and most people are stuck in that fear. So if you use fear to try to get somebody out of fear, it's largely not going to work, right? That's often why I just think about kind of things I say in this ecosystem to build a path to hope, build a path to truth, to build a path to abundance. And then when people don't leave where they're stuck to be more stuck, they leave stuck to find hope.
He argues that Bitcoin is the path toward hope and abundance. His idea is that Bitcoin is going to become the new system, and that the new system will reprice everything in a way that is honest and connected to real value. In his book, The Price of Tomorrow, he argues that exponential technological progress should be driving prices down. This is what my dad would say. But our debt-based economic system fights this with endless inflation, creating instability and inequality. He warns that unless we embrace deflation and rethink money itself with Bitcoin as the solution, the system will eventually collapse.
So today you have 500 million people kind of part of this, part of the winning class, and 7 billion people being enslaved by it. If you add 8 billion minds to what we're talking about, deflation would only speed up the rate of in other words, instead of saying rate of deflation in this case, say the rate of abundance for society would only, because that's the output, more ideas, more hope, more, and so living in that paradigm would mean almost in time, virtually no need for money. It would be a staggering abundance, and Bitcoin is the path that allows us to get to that because it's the only free market. Now, I don't look at it as a technology. I know some people do, but if you look at it as a technology, then I think a lot of people are easily swayed into MySpace was a technology, and so it fails, and then the new winning faster one wins. So if you think about it through a technology lens, then a lot of people are confused, and they look for all of the other altcoins and nonsense. I look at it as a protocol bounded by energy. And so in that protocol bounded by energy, at least what we're talking about right now, Bitcoin kind of layer one, not lightning or anything else, but protocols come in layers, and that this is bounded by energy and creates energy abundance by its very nature, means it doesn't care if you want to price Bitcoin from your piece of paper, right? It doesn't care. It doesn't care if the government wants to expand by 30%. It doesn't care. It doesn't care. It doesn't care anything that's happening in the system. It's repricing the whole thing. And you can prove that. You can say, look at house values in the protocol bounded by energy, and you see they're all falling. They're actually they're exactly what my thesis would say, right? Prices falling, marginal cost of production in everything. If you look at energy prices relative to that protocol, same thing. You look at everything. That's what's so now that beginning of that protocol, that layer one of the protocol, is enforcing that free market that we're talking about, that is that transition path to human abundance. And all you have to do, because it's permissionless, open, open, decentralized, and secure, all you have to do is, today, you can own a piece of it. You can own a piece of the protocol. You couldn't own a piece of the internet. Okay? It means all the future value that ever comes on top of it, you also own a piece of by owning the protocol. And throughout, and that means that whatever relative value of Bitcoin that you think is today, as all prices fall against it forever, it's almost infinite if you could hold on to it long enough, because the purchasing power of it keeps on increasing. Yes, it'll be volatile, but that is doing if you're owning a piece of the protocol. And then because it's so decentralized, secure, bounded by energy, creating energy abundance, now different layers are being built on top of it, like lightning and liquid, like Fediment, which and like Noster, that are giving increased functionality and all different use cases to be built on top of it. And we're very early in this evolution, but it's wildly exciting. I cannot believe I can't believe I get to play in it.
Now, if it's true that Bitcoin becomes the new system, then it's a true wake-up call for all of us. I think of it like Blockbuster and Netflix. Blockbuster had its head in the sand. They couldn't imagine a world where people would want their DVDs shipped to their house. And then even worse, they couldn't imagine a future where all movies would be streamed over the internet for a small monthly fee. So they went extinct. We are in that moment. The financial system we know is failing. If it lasts another 10 years or 50 years, it doesn't matter. What matters is how soon you admit to yourself that the tide is going out and not coming back. Michael Saylor had the same epiphany. He had a business that he realized couldn't compete with Microsoft. They're essentially a monopoly. So what was he going to do?
it wasn't the war on COVID, it was the war on currency combined with the war on COVID. And in that circumstance, I'm standing there and I'm thinking, I wasn't put on the earth to lose like this. Like, this is not how I'm going to go out. And so I started looking for a solution. And I said, well, it's pretty obvious operating companies are discriminated against. People that do things are being discriminated against. I want to be one of those guys that owns things. But I don't want to own sovereign debt. If I'm owning the T-bill, the government's just told me T-bills are worthless. I better go find something else to own. So I started thinking, well, what can I buy? Am I going to buy art? Am I going to buy a building? Well,
how much time were you spent thinking about this at this point? Like, is this like 16 hours a day?
Well, you know, so I was there and I thought, well, what can you buy? It's like, can I buy real estate? And the answer is, well, real estate just doubled in value over a few weeks because Jerome jacked the price of interest to zero. So that's not good. Can I buy a portfolio of stocks? They just went to an all-time high because we jacked the interest rate to zero. That's no good. Can I buy a portfolio of collectible art? Oh yeah, good luck with, like, how do I find $500 million of Picassos and Monets attractively priced? That's not... And by the way, we're now we're struggling with, you're looking at a guy after 30 years in business and an engineering education, reasonably educated, but not a classically trained economist, not an Austrian economist. I am struggling with the time-honored question, what is money? Mm-hmm. I need a liquid, fungible asset which will store my economic energy for an indefinite period of time. Mm-hmm. That is, and so what is money? I'm looking for money. And eventually I get to gold. And I'm thinking, should I buy $500 million of gold? And, my attorney, he looks at me and goes, Mike, I remember when gold was $800 an ounce back in the 70s or the 80s, and then it went nowhere for 20 years, and you should be careful about that. And it might not, it's kind of dead money. And then so I'm sitting at this table and I'm watching the world burn while all the Wall Street guys get rich and the talking heads on CNBC say what they're saying. And I'm looking out at Miami Beach and I'm looking at Collins Avenue, and every car is not, there's no cars on the road except for an Amazon truck, which just makes me angry. One Amazon truck going by. And I've got 82 birds in my backyard and they're hunting for worms because all the restaurants in Miami Beach shut down. So whoever was feeding them is not feeding them. So I'm watching us strip the world back to the Stone Age, right? A devolution. And I'm staring over my pool and I look at Eric and I say, Eric, tell me about that Bitcoin thing again. And Eric was a crypto entrepreneur and he had been investing in digital assets and crypto. And I had dismissed him 2 years earlier in 2018. I was like, oh, that's probably just a scam coin. That's going to collapse. But, everybody finds this when if I tell you got 6 months to live, you would go looking for a cure. And if I told you every asset that you hold in Canada is going to be seized from you within 6 months,
that could happen.
You would think about how you're going to get your money out of Canada.
Yeah, we already thought about that.
And the point is, you didn't think about it for the 20 years of your career when it just wasn't the priority.
Yeah.
And then when you're faced with a crisis, a challenge, you start thinking. So I said, Eric, tell me about that Bitcoin thing again. And he started describing it. And I started thinking, how can I get more information on that? And he said, well, you can go and watch this podcast and you can learn anything on YouTube, right? Mm-hmm. You can learn it if you want to learn, all right? I learned a lot from you on YouTube. I learned a lot about diets and ketogenic diets and the carnivore diet. And I learned a lot about food politics, and I learned a lot about psychology. And well, so I started studying up on crypto, and I started speed watching and intensely watching, and I went and I saw the work of Andreas Antonopoulos, and I saw the podcast of the early crypto developers, and I started looking for the books, and I read the Bitcoin Standard, and I got, quote unquote, dragged down the rabbit hole. And I came to the opinion that the solution was a non-sovereign store value bearer instrument, of which gold had been the best of those.
Yeah.
But then I applied my engineering mind, and I thought the way Heinlein would have thought about it, and I said, okay, over a long enough timeline, what's the mortality rate? Okay, short, people that think short time think about weeks or months or years. I thought, well, let's try 100 years. I looked over 100 years, and I realized that at a 2% inflation rate, and that's the rate at which we mine more gold. At a 2% inflation rate, that means the half-life of gold is about 36 years, which means that the value of the gold you hold is cut in half 3 times over 100 years, which means that if you started with the 100, you ended up with 12.5% of the money you started with over 100
Explain
years.
that in a little more detail.
The reason Bitcoin is so transformational, as I have said, is that it's a new system. Even thinking about Bitcoin in reference to the dollar confuses the truth behind it, actually. Bitcoin is a reaction to a broken system of value exchange, of value storage. If we all end up agreeing that the current system is broken, we will more quickly look for an alternative. But this will take time.
I see it playing out over a long period of time. Yeah, but you don't have to wait for a government. You don't have to wait for a business. It's a permissional open system. You can start living in the future today. And every single person has that choice. Why I see it playing out over a long time is because if it was going to play out over a short term, all of the people in Argentina would not be pricing their homes and stuff through those pieces of paper.
Mm-hmm.
Still are, right? And so why all of the people in Argentina or Turkey, and Turkey has a way higher rate of adoption than some places because more people know this, but it's still not 80, 100%. So you know how easy it is to get stuck in the system and use that unit bias. Otherwise, this question wouldn't even come up. It's so obvious, right? This is because it's bounded by energy and it's decentralized and secure, and you can't change the rules. It's repricing everything else. It's just people's belief that it isn't is holding them stuck into a system that is extracting value from them. So, why will that take time? Because people's beliefs have to change.
Look at Turkey, for example. Their currency has been debased so much more than ours. Their pain has been so much worse that it has caused many more people to look for another solution. So what has happened is that a much higher percentage of people in Turkey have gotten on the Bitcoin bandwagon. And as that happens in the rest of the world, we will have so many people looking for a solution and finding Bitcoin. We are on the cusp of mass adoption, and many believe that it is already inevitable. Okay, now let's bring this down. Let's get out of the clouds. Let's come down to earth again. Is Bitcoin a good investment? Is it a good place to move your dollars in order to get out of the unwinnable dollar game? Let's start with one of the most famous and well-respected investors today, Cathie Wood. She said this recently.
Yes, we think Bitcoin is the biggest idea. It serves the three revolutions. Global monetary system, they do not. New asset class, they are part of a new asset class, but Bitcoin's going to be the biggest. And new technology, it's the most secure blockchain technology out there.
What about all these others, Solana and all these other?
So Ether and Solana, so the big three are the big three. And we think they'll all be successful, all three of them. Bitcoin the most. We're very interested in stable coins, but that's just like cash. And there are millions of crypto assets out there. We think most of them die.
And Chris Camello is a retail investor and journalist known for using social sentiment and consumer trends to spot winning stocks before Wall Street catches on. He has a different take on Bitcoin.
I don't have any thesis on Bitcoin except for one. And it's a strong thesis, and it has nothing to do with the viability of Bitcoin or whether it should be higher or lower, or whether it will actually be meaningful to our society over the next 20 years or be completely irrelevant. My thesis revolves around the fact that the young generation does believe in crypto and Bitcoin, period. Whether they should or shouldn't does not matter as an investor. So you're going to have what, 80 trillion, I've seen numbers as high as $115 trillion of wealth transferred over the next couple decades, 2.5 decades. As that wealth gets transferred over, it is undeniable that a decent portion of that younger generation is going to choose to have some portion of their portfolio or their wealth, either directly if they're managing it themselves, or their wealth manager is going to do it for them, who are also young, because everyone's younger, right, in the next generation. And now that we've institutionalized these products, I don't see how Bitcoin doesn't continue to massively grow just as a result of wealth transfer and nothing else. Nothing else. That's my thesis. That's why I'm aggressively invested in Bitcoin. I'm still worried about the safety of Bitcoin, right? The security of it. Willow is like one example. It's not unsafe now. It's not unsecure now, but things are going to happen over the next 10 or 15 years to keep it a secure asset class. I'm also concerned about regulatory, but right now the regulatory environment looks good. So unless that changes, that's not a concern for me.
Man, these arguments appeal to me because I am a simple man. I have found much of my success in life from macro gut instincts. For example, I built most of my wealth from one observation. I noticed about 12 years ago or so that my habits were changing, my personal habits. I was starting to buy things online instead of driving over to Target. And most of my friends weren't doing that yet. They kind of thought I was crazy for trusting this company called Amazon.com. But I just knew in my gut, I could tell that e-commerce was such a step forward. It was just so convenient and scalable. I just knew it was the future. So I jumped in. Of course, I couldn't predict how insanely successful Amazon would be, but I knew that the world was going to move to e-commerce. And I knew Amazon was early. And that's how I got my company to $20 million a year in revenue. I was probably 2 or 3 years later than a lot of folks in the e-commerce world, but I was early enough, and everything in me told me to jump in, so I was able to ride the wave. Bitcoin is at that moment. From my research, it just feels inevitable. And that is what my intuition says and my spirit. The likelihood that Bitcoin is going to be a major part of the future of money, if not the future of money, is very high. And we're still early. Just like I was with Amazon.com, today we're probably 2 or 3 years later than the first movers. But the first movers have had to withstand a ton of volatility and risk. We're not too early. We're not too late. We could be at the perfect moment.
Stuff that's happened in the past 11 months has been extraordinary. The White House has embraced Bitcoin. This is an extraordinary development. We didn't anticipate this. We hoped that we would get a favorable administration, and we hope we get support, and we had this inkling, but November 5th brought a sea change in politics. And although we thought we might have a pro-Bitcoin president, we didn't think we'd get a strategic Bitcoin reserve. We didn't think that the president would say, America will be the Bitcoin superpower of the world. This is an amazing development. The new administration, every one of these cabinet members flipped from 12 months earlier, where there would have been no one that would have been as bullish on Bitcoin as what we saw here. Wall Street embraced Bitcoin, $150 billion of capital, 1.4 million Bitcoin. This entire dynamic started in January of last year, but it accelerated after July. Public companies. My company was the first public company to adopt Bitcoin. People thought we were crazy. I thought we were late. But what happened next is the second company, the third, then 130. Then companies like Trump Media and GameStop in 21. And now companies are racing to get into the Bitcoin 100. Used to be, we thought, oh, it'd be great. There's 10 Bitcoin companies and 20. Now there's 100. Now there's more than 100. Now we're all going to compete to move up the leaderboard. Let the games begin. Bitcoin wasn't an institutional asset. It wasn't cool on Wall Street. People thought it might be toxic. Now I have a whole set of equity analysts that write research and publish their research to investors, and they put a price target on Bitcoin. So now you have the entire equity capital markets embracing the asset class, writing about it, opining on it. Went from an oddity, tulip bulbs maybe going away, to an entire array of analysts and investment banks starting to have an opinion. And of course, if you look at all the prices up there, their opinion is all positive, it's all bullish. Technology investors have embraced Bitcoin. What you see there is the Bank of America investment analyst equating Bitcoin to something as profound as the light bulb, the Model T, the World Wide Web, right? That's a very important rotation. Bitcoin is a technology. Bitcoin's not a speculation. Bitcoin is not an oddity. Bitcoin is not anarchy. Bitcoin is just the next great technology. Financial regulators embrace Bitcoin. This you never believe. The head of the OCC says banks should support Bitcoin. The Fed says it's okay for banks. They should get on and start supporting Bitcoin. The accountants say you need to provide fair accounting for Bitcoin. This is an amazing development. Capitol Hill embraced Bitcoin. The House, the Senate, the Cabinet, you've got 3 bills, the Clarity Act, the Genius Act, the Bitcoin Act, all moving through Congress right now. This is something nobody guessed, no one conceived of a year ago. States in the United States are embracing Bitcoin. Governors, right? There's legislation working its way through state legislative branches everywhere. Bitcoin is money for everybody, and everybody is getting interested in it. International governments embrace Bitcoin. Spokespeople for the UK, for Ireland, for Pakistan, for Bhutan, for El Salvador, for Russia, in China, in Hong Kong, in Europe, everywhere. They all have an opinion. Their opinion is this is very important. The crypto industry has embraced Bitcoin. These are all public statements from the last 12 months. And let me tell you how I interpret this. This is everybody in the crypto ecosystem acknowledging that Bitcoin is the foundation of the crypto economy. Bitcoin is the reserve currency of the crypto economy. Bitcoin is the one central, certain, unshakable protocol and the fulcrum, the focal point of the entire industry. Everything else is built on top of it. There's been an unprecedented coalition that's come together in support of Bitcoin, and I think a realization that the entire industry needs Bitcoin as their ethically sound, economically sound, technically sound foundation if they're to have any future.
We have seen this transition where governments are adopting Bitcoin and everything built on top of Bitcoin as a legitimate protocol. It was just like 2 years ago, they were saying they didn't trust it. But this is changing quickly. And if you start learning now, if you start getting in now, you're ahead of most of the big players. Sandy Call is a senior executive at Franklin Templeton with a focus on the future of finance. She believes that as we move into a more regulated environment, it's going to open up massive adoption and scale, meaning we're still very early. Charlie Kirk was recently asked about Bitcoin. This guy, he's not a financial guy. He's not a financial guru. His expertise is more in politics and Christianity.
What are your thoughts on Bitcoin?
I'm a big fan of Bitcoin.
Should the U.S. do a Bitcoin reserve?
Absolutely, yes. Yes, the United States should have a strategic Bitcoin reserve.
And who should pay for the Bitcoin reserve?
That's a good question. Hopefully, some of the tariff money could potentially do that. The reason why I think we should have a strategic Bitcoin reserve, I know you guys had Michael Saylor on your show, and I think he's onto something. There is something called like the mass adoption theory, which is over a period of time, like the English language, US dollar, things just catch on and they're just kind of volitional and there's no stopping it. I think Bitcoin is that. You got to watch out though. Quantum computing could potentially crack cryptography.
But if they do that, then they're also cracking bank accounts.
Right.
And stock trading accounts.
So quantum is the only asterisk on all this. But I think Saylor is onto something very profound, which is that because Bitcoin is a scarce, legitimately scarce resource, that it's probably going to go nowhere but up. So Saylor makes a very provocative argument that Bitcoin could go up 10x over the next 10 years or something like that, which therefore if we start a Bitcoin strategic reserve, it could like pay for the national debt and like basically cover our losses on the deficit. But I think that I think the United States government should be invested in crypto without a doubt.
I tend to agree with Michael Saylor that it's more likely to go to 1 million than 0.
Yes, I think that's right.
He's not a crazy Bitcoiner. He's a deeply Christian and highly intellectual man, and he sees its value and its inevitability for governments and for the future of the U.S., and as a store of value for each of us. So, as we consider being part of this new system, understanding this as the future of money or value, let's compare it to our current system. So, see, we live in a debt-based society that uses money printing to pay the debt. And money printing devalues the money that you make from your labor. It's essentially devaluing your labor, which is theft. And what if there was a new system? Decentralized, meaning not connected to a government or a centralized power system, What if it was secure and available to everyone right now? Wouldn't it be wise to consider it?
But let's start at the top level and just to ask a simple question. If you lived on a ledger that was manipulated, and it had to be more manipulated over time, and it was masquerading as a free market, wouldn't that same ledger accrue wealth and status to the people who were best at manipulating it? Probably, or didn't see it. And would there be any place to hide from if you knew that it was all based on that? Could you hide from yourself? Because it would lead to something in you that if you knew and you kept doing that, that you could easily tell. You could say to yourself, you could tell yourself a story. I can't stop it. I'm just part of it, which most people will. But it'll lead to a mirror reflection of the world we see, because we're both the map and the territory. And then ask yourself, what if a system was, you had an open, decentralized, secure protocol bounded by energy that couldn't be cheated? Wouldn't that also be a mirror? Wouldn't that also create a mirror reflection? And so those mirror reflections would be very different,
right,
over time.
Right.
One would get one. You would be telling yourself, "I need to make enough money, so I'm beating the other guy in a zero-sum game."
Yes.
One, you would actually be healing the world, where it's not a zero-sum game anymore, where everyone wins, 8 billion people in service of 8 billion people. And so that would naturally, over time, this could take a long time.
This sounds like abundance to me. This sounds like the opposite of dishonest scales. A world where money is fair again, where it's not devalued, where your labor can serve to make the world better while it provides for your family and your children's children as well. So that's the framework. Bitcoin isn't just another investment. It's not just a place to get outsized returns. It's a reworking of a failing system. It's possible that this is the solution to a world where generations can't afford to buy a house. I know it's going to take more than this podcast episode to convince you. But for those of you that are new to these ideas, I hope this is a bit of a wake-up call to begin your research. For those of you who are ready to start moving some of your dollars out of the system that is not so secretly stealing from you year by year, let me give you a few suggestions to get started. But first, let me tell you about a story. So back in 2021, or maybe it was 2022, I put a bunch of money in a crypto savings account. They were lending money out to others and giving us a yield, like we got an interest rate from it. Come to find out that the crypto assets in this savings account were part of the Ponzi scheme that Sam Bankman-Fried was running. You heard about that, right? He was essentially doing what banks do, taking your dollars in the form of crypto assets and lending them out over and over. In other words, when you deposit money in the bank, they lend that money out to many other people at once. It's called fractional banking. It's shady, and it's part of the problem of our financial system. But it's legal for banks to do this. It's not legal in the crypto space for companies to do this. So he went to prison. And the money that I had in that crypto savings account was locked up. And as far as I understood, gone. For 2 years, I got these notices about the bankruptcy proceedings. I mean, it was terrible. I had a horrible anxiety. I felt like I had failed my family. But then, cut to 2023, the bankruptcy played out and the underlying assets were unlocked and given back to the right groups. And all of my money was unlocked. Of course, I immediately started withdrawing all these funds and putting them into my regular savings account, my Fiat account. But I noticed something. I had some Solana in there, which is a crypto. And while it was locked up, unavailable to me, it had grown about 150%. It was volatile that whole time, going up and down, but I didn't even know it. I wasn't watching it because I had written it off completely. This experience gave me two major mindset shifts. First, most of our worst investment mistakes come from thinking short term. We get scared and we sell at the wrong time. Second, over that same 2.5-year period, if I'd put the same money in a basic index fund tracking the market, I would have made around 30%. Sounds okay until you factor in inflation. That 30% gain actually lost me purchasing power. So by following the conventional wisdom, I would have gone backward. Having that money locked up for 2 years, and I forgot about it completely, I made 150%. That never would have happened. So it helped me to think long term. Watching this happen with my own money was a wake-up call. I learned to be cautious in this crypto space. Most of these coins are going to zero, but the core idea, starting with Bitcoin, is still the most compelling path to financial freedom I've seen, if you truly understand it. One more quick story. I also knew this friend who lost $1 million in a coin called Luna. Maybe you guys heard about this. These things, they happen. We must be wise. But my suggestion is to start your own research, reject the fear, do not be blockbuster. The future is coming fast. Practically speaking, here is something that you can try.
Buy a little every month, maybe every payday. I think one of my daughters was buying Bitcoin every week, but not a Bitcoin. She couldn't do that. A Satoshi, so. And close your eyes. This is a long-term investment. If we're right, according to our analysis. Now, this is our research, our analysis, no promises. We can't do that. But according to our research, the technologies around which we have centered our research and which have focused our investments, we believe will go up more than tenfold in the next 5 to 10 years.
Or Michael Saylor put it this way.
The truth is, the only thing I advocate is if you have a portion of your portfolio that if you have money you don't need for 4 years and you want to hold it for more than 4 years, for between 4 years and the rest of your life, that's your long-term investment portfolio, then you take a portion of that and you buy Bitcoin, which is digital property. If you want a diversified portfolio, I would say you buy some rental real estate or some real estate you're going to hold as a store of value. Maybe you buy a market basket of high quality stocks that you think will last for a decade or decades, or you buy the S&P index. And then you buy collectible items, trophy assets you want to hold your entire life, right? That's normally what goes in that basket of long-term assets. I think the apex property of the human race is Bitcoin. Bitcoin is Manhattan in cyberspace. If you think about investing in Manhattan as a good metaphor, the question is it too late to invest in Manhattan? Well, was it too late in 1680? No. Was it too late in 1776? No. Was it too late in 1865? No. Was it too late in 1914? No. 1945? No. 1976? No. 2000? No. What is the story of, and why is that, by the way? It's because Manhattan's built on an island. There's a limited amount of land. It's the nexus, the commercial center of the North American trade network or the Western trade network. Everybody with money and power wants to go through or needs to go through Manhattan at some point in time. That's been the case for hundreds of years. Everyone that ever bought real estate in Manhattan bought it from someone that paid less for it than they're currently buying it for, right? Mm-hmm. And why does it keep going up? It keeps going up because we keep printing more currency, right? So scarce, desirable assets go up forever. And in this case, is Bitcoin safer investment than Manhattan? I think so, because Manhattan competes with Tokyo and London and Paris, and Manhattan is just a physical city. Bitcoin is the center of the digital commerce or of the digital economy. It's like the capital city. It's the nexus point of the entire digital economy. And it has appealed to everybody on earth speaking every language. You could think of it as a city that's 276 blocks high, 276 blocks wide, 276 blocks deep. That is the integer cube root of 21 million. And when you're buying one Bitcoin, you're buying just one of those blocks. That's how many there's going to be for 100 years, 1,000 years. No one expects there to be any more. And Why is it a useful thing to buy? Because it passes the Bernard-Arnault test. The Bernard-Arnault test says, I have a lot of money. What should I invest it in? I should probably buy something that someone richer than me, more cultured than me, smarter than me, will want to buy from me in 10 years. So when you look at the things you own in your portfolio and you think, will the smart money or will all of the global, intelligent, wealthy class, will they want to buy that from me? And if it's Picasso, probably yes. If it's 25 blocks in the middle of Miami Beach or 25 blocks in the middle of Manhattan, probably yeah. Right? If it's the Magna Carta, probably. Maybe it's a trophy asset in a civilization, but Bitcoin is the most popular, most well-known financial asset in the world that is an investment, right? I mean, it's second to the dollar, I suppose, as a pure financial thing. Everybody knows the dollar, but the dollar is not going up in value measured in dollars. So the dollar is only an investment asset for people in economies with hyperinflation. If you went to 10,000 rich families and you said, how'd you get rich? Not by buying dollars. How'd you get rich? Not by buying gold. Now that you are rich, what are you going to buy? Dollars? No. Gold? No. What are you going to buy? A sports team? Maybe. Right? Leonardo da Vinci paintings? Maybe. The Magnificent Seven stocks? Maybe. A Bitcoin? Digital property? Maybe. The one thing that's for sure they'll say is property. I own buildings and property in London, Paris, Tokyo, New York, San Francisco, LA, Miami. They're the ones that own the 3 acres on the beach in Palm Beach that's worth $250 million right now. That's what they're buying. And why? Because they know that everybody else with money in the world is going to be competing to buy that from them if they want to sell it. And because it's scarce, desirable. Now, the perfect capital asset is something scarce, desirable, and portable, durable, maintainable, right? And what is that? That's Bitcoin.
If you are basing your family's financial future on the dollar, I hope you're seeing how you're building your life on sand. If you're ignoring Bitcoin and crypto, your head is in the sand. You may not choose to move your entire retirement savings into Bitcoin, but it's time to consider moving some. And this is easier than it's ever been before. In your retirement account, for example, you can buy a Bitcoin ETF or an Ethereum ETF. It's just like buying a stock or an index fund. If you have Venmo, for example, you can start moving little bits of money into Bitcoin right inside Venmo. I started that last year. Anytime I get a little payment inside of Venmo, I buy Bitcoin with that money. It's my way of sort of dollar cost averaging into Bitcoin. I don't look at the price. I just buy it. The timing is based on when other people pay me for random stuff. And I just leave it there. My plan is to leave it there for 4 years or more. My Venmo Bitcoin is already up 55%. You can easily open a Coinbase account, for example, and connect to your bank and buy some Bitcoin right there. So this is level 1. This is kindergarten crypto, but that's okay. Kindergarten is way better than not getting educated or staying on the sidelines when the future is upon us. But maybe you don't feel like you have any money to invest, and that's okay. I understand. Let me ask you this. If you knew that the $5 you're about to spend on a latte would turn into $145 in 5 years, would you still buy that latte? Maybe you would, but maybe you would only buy 1 per week instead of 5. Or if you knew that buying a $30,000 car instead of a $50,000 car would save you $20,000, which in 5 years would turn into $572,000, what would you do then? The point is, you can find money. When you know that it's not $5 you're saving, it's $145. And you can live with a less cool car when you know in 5 years it could literally transform your entire future with $500,000. That's when the unlock starts to happen. This is the abundant future. This is abundant frugality. This is what we've been talking about on the show. This is what the download is about. This is the reason we do everything we can to lower our tax bill. This is why we work on freeing ourselves from the scarcity mindset. This is why we make sure we're part of an entrepreneurial company where there's a growth plan. This is why we start our own side hustles and businesses. If you are struggling to get by, I get it. I've been there. I think Raoul Pal puts it well here.
So maybe you don't have thousands to invest. I've seen many, many people in markets like crypto go from $500 to $500,000. Now, there's a lot of people who don't either, but all I'm saying is the opportunity is there. You don't need to bet your house. You don't need to have huge savings. You just need to focus on what you're doing, understand how to manage risks a bit, and how to look for opportunities. And it's the self-teaching is, how do I become that guy who's got a $500,000 portfolio, considering I've only got $500 today or $1,000 today?
Is that possible still?
Yeah, very much.
Haven't I missed the boat?
No. It's happening again right now in meme coins. This is fascinating. People watching this will go, oh, what a bunch of nonsense. These are coins, tokens, and we'll talk about blockchain and this later, but these are investments based on a meme.
A joke.
Something that grabs attention on the internet. And you can bet on those. Well, what is that? That's about betting on attention itself. If you think about a business like Facebook or Google or any of these, Twitter, they're all based on attention. And now we can bet on attention. Do people find that funny? Are they going to find it funny in 6 months' time or 6 weeks' time? And we can bet on this stuff. Okay, this is the super speculative end, but it's also very cultural. It's not about investment bankers. It's not about gatekeepers. It's about you pitting yourself thinking, is this going to catch on viral? And if it is it going to grow bigger? Now, some of those might do 1,000x in 6 months. Now, 99% go to zero. But all I'm saying is returns are there. And then you've got different levels of return. If we look at Bitcoin, well, actually, let's compare it. The S&P 500.
What's the S&P 500?
That's the US stock market. It's the broadest measure of the stock market. And you can buy shares in it. Now, that grows at about 10% a year, 11% a year. So let's imagine you've got your $1,000. Well, 11% a year, it's going to take you a long time to make any money, right? So it is not worth your time. The financial advisors will say, yes, you must do this, start now. I'm like, I'm sorry, it's just not going to change your life. Okay, then we go to technology stocks. NASDAQ does about 18% a year. Okay, that's starting to add up because these numbers compound after a while. You know, it goes from 1,000 to 1,200, and then, you know, it's another 20% on top of that, 20%. These numbers add up fast. Bitcoin, since 2011, been 145% a year, even with it falling 80% 3 times in the middle of that. So 145% a year, as long as you're in it long enough, okay, now that's really starting to pay off. And then as you get slightly more speculative, I take a bit more risk in things, well, the returns go up, but they become riskier. So once you start moving into that world, okay, this is a whole different world now. Now, the guy with $1,000 can get rich.
Now, most of us should not buy meme coins. 99% of them go to zero. Hear me. You should not buy them. Most people lose their shirt on these things. Unless you're deep into this world, stick to the big 3, Bitcoin, Ethereum, and Solana. But Bitcoin itself is the least volatile and the place most of these experts would suggest we start. And Bitcoin is the place that most of these experts would suggest that we start. I started very slow. Back in 2021, I think I bought my first little bit of Bitcoin, like $200 worth of Bitcoin in 2021, to watch and to learn and to understand. And then like I said, I left it for a couple of years without thinking about it. And that's when I really learned something. So start slow. In Proverbs 15:22, Solomon says, plans go wrong for lack of advice. Many advisors bring success. Don't go alone. Surround yourself with wise advisors and ask God for wisdom. He promises to give it to you. James 1:5 says, if you need wisdom, ask our generous God and he will give it to you. He will not rebuke you for asking. And of course, seek first the kingdom of God and his righteousness, and all the rest will be given to you. And that's the pod.